Hello, welcome to the 2021 third quarter review. Good to see you all. I'm wishing you all a wonderful fall season. This beautiful pictures from dropped my son off last year at Oregon State. I thought today I'd just go over a broad overview of the economy, talk about the markets a little, and then go into quarterly reviews. In terms of the economy, U.S. growth remains strong, although the economists have been kind of cutting their forecast slightly down to about 6% for 2021, primarily due to the Delta variant keeping things shut down longer than expected. And also, I'll talk about in a minute, due to labor shortage and supply chain disruptions. In terms of employment, the labor shortage, there's definitely a mismatch. Unemployment remains somewhat elevated at 4.8%, but this year we had a record number of job openings. And if you delve a little deeper, you'll see that there's a mismatch in terms of skills, meaning people that did work in a certain industry, like maybe healthcare or entertainment or services, are no longer seeking jobs in those industries. And then geographical mismatch is people that were in the cities are now in the suburbs and hoping to work remotely. On the other side, inflation, we're seeing increased inflation, and there's a lot of talk about, is this temporary or transitory, and is the Fed going to do something? And right now, the biggest cause, partly the labor shortage, but mostly the supply chain disruptions due to COVID. And you've probably seen some of the articles and some of these pictures. We have a record number of cargo ships in line off the coast of Southern California, and also on the other side of the world in China, waiting to come over, and just huge bottlenecks with shortage of truckers and warehouse workers, and also just supply bottlenecks. So if you're trying to get your Christmas presents shipped, you probably should do it this week. In terms of the third quarter, it's interesting. We actually saw a round trip. We saw the quarter start and hit all-time highs back in the beginning of September, only to drop back down to where we started at the beginning of the quarter. And part of the reason for the drop was the real estate in China, Everglade, and also a lot of the drama about the debt ceiling. Year-to-date performance, a balanced fund was up 7.35 so far for the year. Top performing category, real estate, and U.S. large caps doing very well. In terms of review points for our meetings this quarter, we'll look again at rebalancing, and probably the major focus will be on year-end tax planning. There's quite a bit of opportunities given all the tax changes and the proposals going on, and I can go over those in more detail in our meetings. But we have some opportunities before the end of the year to look at some tax savings. And one of those is long-term gain or loss harvesting. And the other we talked a lot about is Roth conversions. In regard to the Roth conversions, the advantage is you're going to pay taxes at potentially lower rates right now, and then get the tax-free growth going forward. So would you rather be taxed on the acorn or the tree? And lastly, required minimum distributions and tax reporting. If you haven't taken your required minimum distribution and you need to, I will be contacting you. And then if you provide your tax preparer or CPA's information, I'll be happy at the beginning of the year to give them your tax reporting information directly. So I look forward to seeing you all either in person or remotely, and I hope you have a good day. Thank you.